But moving on, over the last week, we saw pictures, haunting pictures really, of the devastation that hit Japan. And like everyone else, we probably sat back and thought about what would happen if something like that happened to us. Well, actual loss of life can never really be compensated for, but for those people in Japan who did use insurance perhaps to guard them against the loss of property and against the loss of income, that might provide some solace. Today we're bringing you what we can do today to secure ourselves and our families and our businesses from such calamities using insurance. We have a step-by-step guide for you. Take a look. These shocking, haunting visuals are not going to be forgotten anytime soon. The earthquake and tsunami that hit the coast of Japan killed thousands of people and swept away homes, cars and buildings, knocking down everything in its way. The loss of life and property is still unknown. It's not an event to take lightly. It's a time to ask yourself if you are prepared. The assets you've gathered over the years with your hard-earned money could be wiped away in just one moment at nature's will. But you can stay protected by insuring your assets against natural calamities, and we will tell you how. Let's start with your biggest asset, your dream home. Do home insurance policies cover you against natural calamities?
Yes, it does. In fact, apart from fire, the natural calamities are covered, like earthquakes, storms, floods and so on. So that's intrinsic part of the coverage for householders insurance.
It covers two things. One is it covers you for the structure of your property. And the second is, if you choose so, it can cover the contents.
Householders insurance is not just limited to those of you who own a home. You can insure the contents of your house even if you're just renting one. This is how you get started.
The home insurance can be bought either via an agent or a broker, or you can even go online and buy it. In both the cases, the things to remember for a customer are that in the case of a structure, there are values that the insurance company basically insures for, and this is really around saying what is the replacement cost of the asset. So how much will it cost to build the house again in the event it is destroyed, for example, and they have certain assessed values for that.
So an idea of the area of the house, I think everybody would have a fair idea. We multiply that by the average cost of construction of the kind of quality that is already there in that area, in that city. That will give an idea of how much coverage is required for the structure.
It's very simple as far as we are concerned. I think it's a pre-approved policy, so all you have to do is fill the details and the limits for the cover, and it's a declaration policy. There is no check by a surveyor, etc. And once you give the declaration amount, and it could be anywhere from 2 to 5 lakhs or more, it gets automatically issued.
If you're renting a home and you want to insure the contents, the procedure is simple. You have to decide the value of each article in your home and give the insurance surveyor a total value. The company will then work out the premium, and you will be pleasantly surprised to know it's not very expensive.
The range would be anywhere from about 70 to 100 rupees per lakh, for the structure and the contents. And also in home insurance, because the premium value per se becomes low, there are also options available where customers can buy a long-term cover. So it could be a 5-year, 10-year cover as well.
So if you buy a home insurance for 50 lakh rupees, it would cost you 5,000 rupees a year.
In spite of the fact that home insurance is very affordable and easy to buy, rough estimates from the industry suggest that less than 1% of the Indian homes are insured, which means if we were to have a situation like the one in Japan, 99% of the people are not prepared.
Now that's home insurance. We know that car insurance is better penetrated because it's compulsory. But does your auto insurance policy cover you against natural calamities?
Natural calamities are covered by comprehensive covers. For example, in the Mumbai floods, there was a lot of cars which got damaged and they were covered by comprehensive motor policies and they were repaired and the claims are paid on that.
A comprehensive motor insurance covers the damage of your car from theft, storms and fearsome acts of nature. Apart from comprehensive covers, general insurance companies also offer special covers for cars.
If you have a zero depreciation cover, which is basically coverage which adds back that cut the claim, which basically means that there will be no deductions for zero depreciation.
We also protect the passenger as well as the co-passengers, including the owner. So in case the car meets an accident, there is an ambulance cover that is given, which basically can ferry the customer from the site of accident to the hospital.
And apart from that, we have add-on covers like loss of use if the car is in a garage for a longer time. Then there's a kind of a lump sum payment which happens for the customer to look at his transportation needs in the meantime.
A comprehensive auto cover of 4 lakh rupees will cost you roughly up to 10,000 rupees a year. So that brings your total insurance bill up to 15,000. So now your home and car are insured. Let's insure you. A personal accident policy which protects you against natural calamities costs as little as 100 to 150 rupees per year for a cover of 1 lakh rupees. This could also be an add-on rider to your existing life insurance policy. The next thing to worry about is your business if you've started one. A natural disaster could wipe out your office and its contents, your warehouse and its stock. Insuring your business against natural calamities and theft will save you from getting financially wiped out.
You could insure your business against loss of revenue or additional costs in the event that your business is shutting down or has to be shut down as a result of a calamity or as a result of flooding.
The premium on these policies would depend on the extent of the cover and the business you're insuring. Let's assume you buy a shopkeeper's policy that covers you for 10 lakh rupees against fire and allied perils. That includes natural calamities, burglary, acts of terrorism and protects the electronic equipment in your shop. Your premium would work out to about 12,250 rupees every year. So let's review our total bill. If you insure your home, your car and yourself, you'll pay a total bill of 15,100. If you insure your business, that comes up to about 17,350 rupees a year. The important thing to remember about these insurance policies is that they're really affordable. They really don't cost that much and you just have to renew them once a year, and it goes a long way to help you out in case something like that actually happens. So go out and buy that insurance policy today. Coming up after break, we get more experts to answer your questions. Don't go anywhere.